So, first up, in terms of projects and project billing, we're going to start at the end. So, when it comes to projects, everything comes through in the invoicing screen. This is where everything comes out in the wash, and you are always going to have to invoice something to be able to get it cleared out of ConnectWise. Some gotchas and some things that I see, especially as people are newer with their ConnectWise, newer with their implementations, is that they tend to not close projects on a regular cadence. So if you are closing projects slowly, if you have a lot of pre-close statuses, or if it takes a really long time to close a project, there's a very good chance that you won't see large projects in your invoicing screen until they're completely closed. And that's because of if we go into any of the projects on the finance board, we have this checkbox, bill this project only after it's been closed. By default, your ConnectWise is probably set up to only bill the project after it's been closed. If that's the case, sometimes what happens is I go in with my clients, we unselect build this project only after it's been closed, and a bunch of new projects show up in the invoicing screen. This can represent a huge dollar value, a lot of money that you never billed as part of the progress billing of the project, and now you have to bill only at the close of the project. As such, I recommend keeping an eye on your projects and making sure that you are billing them on a regular cadence. My most mature MSP security and Pro AV clients bill every project every month. So they look at every single one of their projects. They have a meeting with project managers, finance, even sales, and they say, what percentage of this project can we bill? What revenue can we recognize to make sure that we are realizing revenue as we go through this? With that, it's helpful to only look at projects in your invoicing screen. So I do recommend making a view just for projects. And I'll show you how to make that view right now. What you do under the view section is you click on view. You're going to have a view name called projects. And what you want to build is that the project name not contains empty. What this looks like from scratch is plus projects. And we're going to go project name, project ID, not contains. And we're going to say blank and then hit update. And then we'll hit save. And there we go. We are only looking at our projects. If you have multiple locations, Darlene, I know that you have multiple locations within your environment. You can have one for one location and then one for another location. Awesome. So is everyone billing projects on a monthly basis? Or are you looking at what kind of cadence are we billing projects at?
We're definitely doing every week.
Oh my gosh, amazing.
Hmm.
So that's great for revenue recognition. Derek, hopefully, this isn't new information and we're billing on a pretty regular basis. With that, it's helpful to also, if you're not billing other things on a monthly basis, if you're billing service tickets on a weekly basis, if you're billing sales orders on a weekly basis, I like to have a view for every single one of the different things that I bill because they have different billing cadences. As we go through this system, you'll notice I'm a huge believer in clean screens. So I love creating a view for something in which every single line gets the exact same action. So if it's sales orders and you bill all your sales orders the same way, you can go through on a weekly basis, create your invoices, and then have absolutely nothing under your sales order view. Why I think this helps is because someone knows when their job is finished. So you know as you go through your list when you have completed the list, and that is a clean screen there. You can't necessarily do it for projects because you are just going to be invoicing as you go. If you can't see this WIP amount, it's under the little gear icon. Make sure that you can see the WIP amount in your visible columns. It might be here on your hidden columns. If so, move it over to your visible columns and then move it up. These columns also drag. So it's important to know that you can drag these columns around. And once they're here, they're visible, especially when it comes to billing fixed fee projects. This is really important. This shows the amount of labor that has been incurred on your project that is currently unbilled. So you have technicians, project managers, solutions engineers, whomever, who are working on projects and have put together $1,000 worth of revenue that needs to be billed to the customer. When it comes to this, I like to look at the billing method as well. So we can see this method here. The first one is actual, which makes sense. The last one now is actual, and this one is fixed fee. Every month, or if you are an overachiever, every 2 weeks, you want to be clearing that WIP amount and making sure that you're invoicing everything out. If it's an actual project, you can go ahead and just put a regular invoice together. Regular invoices, or how I see most people invoice when they start invoicing, is by selecting the item line and hitting create invoices. This is the most basic way to create an invoice. Most of the time, it is not the right way to create an invoice. And I'll show you why. Hi, Teresa. This is all being recorded, so you'll be able to go back and watch the beginning of this. When we create that invoice, the way where we just select the item and create invoices, it creates an invoice known as a standard invoice. When we go into invoice search and look at the invoices we've created today, we're going to be able to see that it has been created as a standard invoice. Standard invoices, when it comes to fixed fee projects, are the last invoice you should really ever be creating when it comes to an invoice. Fixed fee projects instead go through a process where you can create a down payment invoice, then you create progress invoices, and then at the end, you're going to go ahead and create one final standard invoice. And we'll walk through all that together. Teresa, I just wanted to let you know this, I'm going to go through whatever it is, but are there any specific questions that you wanted to make sure were covered today? You can also put something in the chat if there are any specific questions that you want to make sure you get covered. Good. Awesome. Okay. So fixed fee projects. And now we're talking about the different kinds of invoices that you can have. You can have down payment invoices, you can have progress bills, and you can do a standard invoice at the end. When it comes to a down payment invoice, those can get created at any time. Once you have a project, you can create a down payment invoice, and you can create more than one down payment invoice. When you're creating a down payment invoice, you don't do it from this screen, but here's how you go ahead and you create a down payment invoice. Make sure you know what the project name is and the company name. You're going to go into Finance, Special Invoices. Under the special invoices, you're going to put in the company name and you're going to change the invoice type to down payment. Next up is the most important step when it comes to project billing. You're going to want to make sure that you open up this apply to. And what you will see by default is any open project for that company. If you want to see other projects or closed projects for the company, you can select the show all projects, and then it'll show you open and closed projects. We don't want that. We want to make sure that you are applying the down payment specifically to the project that you're going to be collecting a down payment for. Is that if you don't select a project, this down payment can be used for any invoice created for that company. So agreement invoices, standard invoices that you create for service tickets, those can start to chip away at that down payment. And when it comes to reconciling the down payments and aligning all your project billing, it creates a world of headache. You want to make sure that the apply to is the project that you want, and you're going to go ahead and restrict the down payment. Once those two things are put together in place, this down payment will only be allowed to be allocated against the original project. You won't be able to use this money for anything else. You put in what your down payment total is, and we're going to go ahead and hit save. Now we've created a down payment invoice. If we refresh the invoicing screen, you can also see that the down payment amount has been refreshed. This shows the total open down payment amount for the project. So this is the amount of money I have to pull against to pay for WIP, to pay for products, and to pay for expenses if I am billing expenses to the customer. Those are really the only three things you can bill out from a project is the labor, the products, or the expenses. I'm going to make this project a little bit more expensive. So let's hop into the project name and I'm going to go to the finance tab. As mentioned, I have bill this project owner only after it's been closed deselected because I want to be able to see this project at any time. As a failsafe, I also indicate restrict down payment to this project. It's a bit of a double catch because you can restrict the down payment to this project, and on the special invoice, we also indicated it was restricted. I turned them both on just to be careful, and I think that it's helpful to have both. Bill unapproved time and expense records. Now, we are in the pod for the billing information for the base project. I use this in a YouTube video, so this is a YouTube example. And then we have our billing method, which is fixed fee. The billing amount right here is $340. This is where some people get confused, and I understand why. They think that the fixed fee of $340 is for the whole project. I want you to imagine that it says billing method labor right here, because this billing amount is only the fixed fee labor amount. And we're going to put quite a bit of labor on this. If this is wrong, and if it isn't the proper amount of labor that was quoted in the original job, it can really hurt you down the line as you go through and update all the information and try and do your invoicing. So whomever is converting from the opportunity to the project or from the opportunity to the sales order to the project, make sure that this billing amount is correct, that it represents the entirety of the labor that you are billing. That might change for you. So you might have phases that you are billing separately, and you are going to be billing, let's say, $25,000 at one time here, know that by adding a phase like this, you are effectively creating another mini project within the system. And that ConnectWise is going to view them as almost two different projects. What I mean by that is if we look at the Wickham mic, you can see here that because I put the bill phase separately in, I now have two lines in my invoicing screen. I have my base project for $25,000 and I have my additional $1,000 here for this project name. This is a question I get all the time. Why are there two lines in my invoicing screen? So what I highly recommend doing is making sure your project name column is as wide as possible. When you first get it, it's going to look a little something like this, and you'll never be able to figure out why you have those two different lines. So I like to make my project name wider so that I can see if something's happening and if there is a phase one and a base project associated. When I say that these are two completely different projects, I mean that in a lot of different senses, because now if we look at creating a down payment invoice, which we did before, we're going to go into special invoices. And we'll put in our company name. Now, if I go into down payment and I say apply to, you're going to see that there are two separate projects here. If you accidentally chose this project and tried to collect a down payment of more than $1,000, so let's say you collected a down payment of $3,000, that is only going to be associated with the phase one line right here. It is not going to help you with that base project. So when you are billing in phases, you have to make sure that your down payment invoices are indicating the right phase and that you're aware of which phase you are billing. For people who have not a lot of projects or don't have very large projects, I highly recommend avoiding phases for as long as possible. I think that it gets extremely confusing and difficult to organize all this. And so I recommend keeping everything under the base project. You can do this by going into your project itself, going to the work plan, going to the phase, and deselecting bill phase separately. When I do this, you're going to go back to that finance tab and see that everything is now under one base project and we don't have additional phases down here. If I go here and hit search in the invoicing screen, I can now see that everything is associated on the same line. Any questions so far? Okay, let's keep going. When you have a down payment, yay, and you have your WIP amount, it's important to clear your WIP as you go through. And this is going to be an example of my month end. I'm here at the end of my month and I want to make sure that I'm realizing the revenues and costs for labor at the end of every month. I'm going to make sure that the company name is visible. In the invoicing screen, the company name is way more powerful than you think it is. Most of the time, when you're clicking around in any of the other parts of the system, when you click on company name, it'll take you to the company profile. Under the invoicing screen, the company name is going to take you to a preview of what's going on the invoice. So you can see your time, expense, and product here. I'm going to go ahead and go into the Actions tab and create a progress bill. For those keeping track, projects like to be billed with a down payment first, if applicable, then progress bills, and then one final standard invoice. I'll go into create a progress bill. What I can see here is that I have $25,000 worth of labor revenue to bill to this client. At this point, I have $24,000, which I could invoice today. I'm not going to invoice all of it. I just want to invoice the labor that I've incurred so far, that $340. And maybe after I talk to the project manager or sales, we decide that it's time to issue a $500 invoice to the customer. By filling out this WIP bill amount, it's going to indicate that I am invoicing $500 of the $25,000 worth of fixed fee labor. I'm not going to select the charge adjustments to the internal company instead of employees, but I am going to attach time records to this invoice. And I'll show you why. If I don't, and I hit continue, it's going to create an invoice, but I did not clear my WIP. And when I go back to my invoicing screen and hit search again, I'll see that my WIP amount is still sitting there. So instead, I'm going to make sure I attach those time records. And we'll just go ahead and delete this one. And we're going to do it again. So now company name, actions, create progress bill, $500, attach time records to this invoice. I'll hit continue. And now I can see that the time is associated. Why that matters and why it's so important to have time associated is that once this invoice is closed, it will create GL entries. And that is going to put the labor and time into the accounting interface. You'll note that it's also doing a few other things. It's pulling $500 from the deferred revenue. And that's because the other thing that's happening on this invoice is that we are using $500 worth of the down payment amount. The total down payment was for $1,000. We're using $500. So we're going to use $500 from the deferred revenue, realize it as income, and the time is also going to go over as part of a cost. I see we have Mira too. Any questions at this stage in regards to progress billing?
Nope.
No. Great. Thanks, Darlene. Okay, perfect. The goal is to continue to bill your project down to zero. And we all know in the real world that doesn't always happen, but you want to keep progress invoicing until you get as close to zero as possible. And then you're going to create a progress invoice. As you have products that are added to the job, and we're just going to add a couple here. And let's add a few actually. You can go ahead and partially bill your products as well. So if we go into this company name and we go to the product tab, I can see that there's a number of different products here. I always recommend invoicing your products after they've shipped. That might not be your cadence. You may be billing to try and collect as soon as you receive the product. In that case, it's still better to do it with a down payment. The thing with product billing when it comes to projects in ConnectWise is that you have to bill line by line. So you have to say, yes, I want to bill this product. I want to bill this product. I want to bill this product. That can get very tedious. So what I normally see is that a down payment is created at the very beginning of the job for the total amount of the hardware. That is going to help keep things a little bit cleaner as we go through this progress billing. When I'm looking at my products on my product tab, I like to make sure that I can see the following information. I like to see the quantity picked, and the quantity shipped. For me, this helps to tell where the products are. Your quantities should be what you need for the product. Picked means that you've received it on a purchase order or you've pulled it off the shelf for stock. In theory, picked means it's still at your location. So it means that you are staging it, you're putting it together, you're commissioning it, you're doing something. It's all still in your warehouse. Shipped means that it's at the client site. So ship means that it's actually been delivered to the client. If you invoice based on everything that is shipped, then you're going to go ahead and you are going to just sort by the quantity that's shipped, top to bottom. You have to click all these one by one. Once you have what you want to add to the progress bill at the end of the month, you're going to go into the actions, create progress bill, and you're going to get this warning. And it's only going to select the items that you would like to ship or that you would like to invoice. At this stage, maybe I don't have any labor and I really just want to bill products. So I'm not going to put a WIP amount. I'm just going to hit continue. And now I can see that 4 products were selected to be added to this progress bill. If we scroll down, we'll see that it billed the whole service total. Sorry, I should have put 0 in. It's only billing products. So we're only going to be billing products. It's using the next $500 of the down payment, and it's bringing our remaining down payment down to 0. This is now a product only progress bill. You don't have to add labor every single time that you're doing a progress bill. It can just be products if you'd like. The detail list of the products is here. Depending on the invoice template that you're sending to the customer, you're either going to have a list of all the products in detail, or you may have just a high level that says hardware or something like that. When we go back to the invoicing screen, we'll see that the total bill amount has increased. That's because we added product to our labor. The bill amount of this project is going to be the total amount that's left to bill. One thing that I highly recommend doing is right after you convert a project. So right after a brand new project is created, come to this invoicing screen and look at the bill amount. See if the bill amount matches the opportunity and the signed quote from the client. If you can make sure that that number is the same across all 3 of those data points, you will be able to invoice and bill correctly. If this number does not match right from the beginning, it's going to be really hard to reconcile that as you move backward and go through. Attach time records to this invoice. If you notice you're selecting that every single time, you can actually default it. And I think it's under the setup tables billing, but let's just double check. And once you turn this on, you're going to be very grateful because usually you're going to want that defaulted here. So again, that's under setup tables, billing list, billing, and then click this progress time, attach time records to progress invoices. Highly recommend. Also, I would turn this off. I would turn on bill unapproved time and expense records, and I would turn on restrict down payments. If you are the one responsible for setting up your ConnectWise environment, I recommend doing this. Project boards do have a little bit of an override. So if we go into the project boards and we look at the specific boards, you can override the billing setup for the board location. So you can see here that you can toggle this on and off. What you will notice is that the attach is not here. So that's why it was so difficult for me to figure out the first time. I went to the project board. I looked for that attached time records to progress bill invoices. It wasn't there. This is a project board specific setup. Bill unapproved time and expense records. Please turn this on. If you don't have the best approval process, so if you go into the My Approvals screen and you show approvals, and there are any numbers at all under missing timesheets, missing expense reports, timesheets pending approval, and expense reports pending approval. It means that you or someone in your company or the progress or whatever it is are not approving everything on time. This can happen for a number of reasons. And a lot of the time when I have a new client, we come here and we clean this up. The worst case scenario is that all of these time entries are on projects and service tickets, whereby they say, do not bill unapproved time and expense records. So we come here, we approve everything. As soon as you approve all those things, they show up in the invoicing screen. I had a client that had $60,000 worth of unrealized revenue where we hadn't approved the time and expense. Once we approved it, it all showed up in the invoicing screen, and some of them were 2-3 years old. So please, if you take one thing away from this meeting, is to go into the approvals, see what's there, make sure everything's approved, and check your invoicing screen. At some point, it's too late to bill back to the customer, so you might have to just, absorb that cost or lose the revenue. To prevent it going forward, I highly recommend billing unapproved time and expense records so that they flow through. That means that as soon as time is logged on a job, it will show up in invoicing, no matter what. There is a risk that technicians put too much time on things or that there is an issue where you're going to be slightly overbilling a customer. However, because someone is looking at these before we send an invoice out to the customer, and you probably have a ticket pre-close process on the service side, it's better to make sure that you're realizing revenue as you go through versus waiting till you clean up the time and expense approval summary and finding out later. Again, it's up to you. That takes us through some of the defaults and setups that I like to come in and check and make sure we have everything kind of clear at that stage. I'll do a brief pause for any questions, if anyone has any questions. Okay. Let's hop into the project header just to kind of give you a little bit of some tips and tricks and some things that I like to do with my clients. First up, project statuses. I love to see when the statuses are tied to billing. So if you have fixed fee projects and you always like to have a certain amount billed by a certain time, I really recommend putting that information into the statuses. Now, would it be even better if you could see the project status in the invoicing screen? Why, yes, I would. I have requested that with ConnectWise in many a different way. But this is where when you go through your month end and you are looking at all the different projects that are open, you would start at the projects that are closest to closed. So you would say, okay, these projects are close to closed. Do we have all the time on them? Do we have all the expenses on them? Is there anything else happening? No. Okay, we can create a standard invoice and make sure this project is fully closed. Then you would move backwards. You could look at everything that's in an installation status and know that those are supposed to be at a 30% bill. So those are all supposed to have been 30% billed. And that might be labor. You want to 30% bill your labor, or you want to 30% bill your entire project. By putting these in the status and having them be a little bit more visible, it helps the rest of the business be aware of the billing implications. If you have installation 30% bill and you're in an installation and the percentage complete is 15%, for example, you might be in trouble. You might say, well, when we're in the installation phase, we like to bill 30% of the labor, but it says that this project is only 15% complete. What's going on? What do we need to do? Do we need to put more people on this job? And that's how you would look at some of those items that are happening in the back end. Again, highly recommend having those project statuses have the different bill amounts. When it comes to invoicing, we talked about the finance tab. In the budget analysis, you can also use actual hours or use billable hours. I like to always use actual hours. Some people get a little tripped up when they are entering time on projects, especially fixed fee projects. And this is a problem I see all the time, so we'll just spend a minute talking about it. People are really afraid to put billable time on a fixed fee project because they think that it's going to create more of a labor charge than is listed on the fixed fee. Don't worry about that. You should be entering billable time on your fixed fee projects. The reason being is that whether or not something is billable is set up based on the work type, and you don't want to have different work types for your projects than you do for your service. So keep everything streamlined. Make sure that your work type is the same that you're using for projects or service tickets, that it has the correct behavior, billable versus non-billable. And you can enter as much billable time as you want against a project. It does not matter. The client will never be invoiced more than $25,000 for labor. So if you had $30,000, $40,000 worth of billable time on this project, it is going to cap at that fixed fee billing amount. That is the top amount that we're going to bill against. When you are invoicing out an actual project and you're invoicing time, you may be in a scenario where the time is wrong. So we talked about having unapproved time and expense show up later and how that is an issue. The problem with unapproved time and expense is that someone might put 8 hours on a project where this amount of time should have only taken 4 hours. So you're here in invoicing. Let's just double check. I think that this is set to bill unapproved time and expense records. Great. Let's go over to the time and double check it. Okay. So now we have this right here, which is the time. You're the one responsible for billing. You come in and you see that the invoice hours right now are 8 hours. This is incorrect. It's a new tech. They took 8 hours. This is a time and materials project, and you don't want to bill out 8 hours to the customer. They would lose it and they wouldn't pay the invoice. Okay. There's a difference between hours and invoice hours. And you, as the finance person, can change the invoice hours without changing the actual hours. What I see a lot of people do is go into the time entry and actually go into the actual time entry and change the amount of time that this person worked, which is not correct. And you're starting to mess with the data. Instead, you're going to scroll down and go to this invoice hours section down here. The invoice hours section allows you to put in how many hours you're going to invoice for without changing any of the integrity of the actual time entry. To a technician, we always have to decrement the invoice hours versus your actual hours. Is there training required? What needs to be done? So if you are responsible for invoicing, come down to this billing options section and look for that invoice hours pods. That also works on service tickets. So you can override and say, this is how much we actually want to bill out versus how much was logged. If we go back, we'll see that the WIP amount has now been updated to the correct amount. The other thing that I want to mention as we scroll down here is in the billing options pod, there's this hourly rate. This is extremely helpful because it tells you where that hourly rate is coming from. Why I love this is that if the hourly rate looks wrong, so if something is happening where the hourly rate isn't our standard hourly rate, it will give you a breakdown as to why the rate is different. Here, this is standard. So we see that the work role is coming from the setup table and that the work type has a multiplier of 1. So the hourly rate is 85. Perfect. That all looks good. When you are invoicing agreements, if we were to go in and invoice an agreement, there might be a specific agreement rate, and this one doesn't have any time on it. But if you go into the time section and look at it, it will break down why that rate is different. So that's how you can dig into that and find out a little bit more information when the hourly rate doesn't look right. If you're ever in a position where you feel you need to change something, so you feel you need to change the hourly rate, don't. There's probably a reason why that hourly rate is the way it is. Look into the investigation here, find out the root cause as to why that hourly rate is so that you don't have to keep doing it every single time. And of course, I think everyone knows this, but these little help buttons take you into the ConnectWise University directly for that page. I think the ConnectWise University is quite good. It's just overwhelming and I can never find the page that I'm looking for. What I recommend doing is using that little question mark in the top right-hand corner. It's going to take you to the help specifically for that page. I use it all the time and I still use it to this day almost all the time. Highly recommend it. All right, so those are invoice hours, invoicing, etc. Once we have completely invoiced out and done all the progress bills for our fixed fee projects, so let's do our YouTube example. We're coming back to this one. We have products now. We're going to create a progress bill. We're going to invoice all those products that are there. You cannot overbill when it comes to projects. This remaining fixed is going to stay as it is. So you won't be able to take it further than the amount that you have from the pot. It's going to continue to draw down. Once I am at a point where I have created all the invoices that I need to create for this, it's going to disappear. So now we can see that the project has been fully invoiced. We'll go back into that Wickham project. And you can see all the invoices that you've created on the project under the Invoices tab. This defaults to last 90 days, which I find extremely frustrating, especially if you have multi-month, multi-year projects. So we'll just go ahead and say all. Here we can see that we created some down payment invoices. We went ahead and created some progress invoices. It's no longer showing in our invoicing screen. This is great. We're at a point where the project has been fully billed, but we know that nothing ever comes easy. And there's a very good chance that someone's going to add a little bit more time as part of a closeout, or they're going to add time. When that happens, it's going to pop up as a $0. And we can see here that the WIP amount is 85. At this point, there's nothing left to bill. And hopefully nothing else is happening on this project. At this stage, you can go ahead and create a standard invoice. You have completely depreciated the bill amount. You go back to the first way we created an invoice, which is selecting that white box and hitting create invoices. And you say yes. And now you're going to have one final invoice sitting at the end, which is going to be that standard one. Any questions on any of the different invoice types that we've gone through? Once we are happy with that, we're going to put the project to closed. We're going to make sure that no one else is adding anything else, but if they are, so be it. You can always open the project back up if you have to, and you will always see it in the invoicing screen, provided that you can see projects as they are, you don't have this selected. Bill this project only after it's been closed. Lastly, let's talk about reporting. One thing that I do not love, and that's a little bit frustrating, is when you look at the project board and you are looking at all these numbers, your amount remaining, for example, revenue, all these different pieces of information, these are all manual. So sometimes I have clients who get really frustrated saying, well, why do I have a negative amount remaining, especially here? It's because this page here on the finance tab is not filled out correctly. If you don't have your estimated product revenue, estimated expense revenue, and estimated time revenue, then what you're going to see is this $6,100 is what your project thinks is going to happen. So this is how much revenue they think it's going to have, minus $7,500 that we've invoiced. Now all of a sudden you're in a negative. So one check that you should make sure you're doing, I just had a client yesterday that we went through this with, is that your billing amount for fixed fee should be the same as your estimated time revenue. Those added together should be the exact number from your opportunity and the exact number that the client signed off on as a quote. If you're not entering the information here in these 3 pods, most importantly, then your project board is going to be wrong. And now let's go back into our top one, project board 28 test quote, and scroll across. We can see that there is a negative $1,000 amount remaining, but that's because we have billed $14,600 and the expected revenue of the job, those two numbers added together, which is our expected time revenue and our expected product revenue, are $13,600. Don't be concerned about a negative amount remaining here. Instead, go to the finance tab, make sure that your 3 revenue sections are up to date. Make sure that this revenue amount matches the PO amount. Then start to look at this billing here. Amount remaining ideally should be how much you need to bill and how much is left to actually bill the customer. If you have negative, definitely take a look at it. The rest of this information is relatively straightforward, but again, not the best reporting I've ever seen. The project reporting that comes out of ConnectWise out of the box is medium. If you have a Power BI, there's some better things that you can do in terms of reporting. Awesome. All right, well, that was a ton of information. Hopefully, I know no one had any specific questions, but I just wanted to see if anyone had any questions, concerns, or anything that came up as we went through this process. No. Okay, great. Well, sorry, go ahead, darling.
No, I'm good.
Okay, well, I hope you found this helpful. Thank you so much for coming to my first office hours. You have my email now, so if you do have specific questions, if you have ideas, thanks, Eric. Thanks, Teresa. If you do have specific questions, send me email, and then I will dive into a couple other topics based on what you guys have the most questions about. So I'll let everyone go a little bit early, and I will make sure this recording is sent out to all of you, and we'll keep doing these if you find them useful. Thanks,
Cheers,
everyone.
Monica.
Have a great rest of your day.
Bye.
Bye.